My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today our special guest is a multifamily syndicator. He's a gentleman that has a very, very analytical background. Jonathan Nichols is not only a real estate entrepreneur, but his background is in engineering, and not just any kind of engineering. He's one of those smart guys, an aerospace engineering, and since then he's become very, very involved in multifamily, and they've grown a very significant portfolio, both as GPs as well as LPs. So Jonathan, welcome to the show. Great to have you.
Hey, Dave, thanks for having me. Excited to chat for a few minutes.
So right now we're in the middle of 2025, Jonathan. Maybe zoom out for a second. Give us a big picture overview. What does the portfolio currently consist of? What kind of properties, how many units, how many communities, however you count this?
Yeah, absolutely. So, kind of the 20-second summary is my wife and I started investing in real estate about 8 years ago. So we bought around 20 units of single family local to where we live here in Arlington, Texas, which is part of Dallas-Fort Worth area. During COVID, we switched over to multifamily. We buy a lot of 100-ish unit properties all over Texas and Oklahoma. We favored a lot of tertiary markets across those two states. And so today we have about 1,000 units as general partners and still looking and actively growing. And then some limited partner investments as well.
Oh, that's wonderful. So what you talk about tertiary markets, 100 units. What does your buy box kind of look like, Jonathan? What kind of properties are we looking at? Class A, B, C's, D minus? What kind of properties are you guys focusing on?
Yeah, so we've bought everything from, I would say, C plus, all the way up to we have one A minus property, but mostly kind of that C plus B minus sort of box. Most of our properties are around 100 units. And so, just large enough that you can have full-time management in place. That's something that we really look for on our projects. As far as kind of the reasoning behind the tertiary markets, we got into this business, 2020, early 21, which was obviously a very, very hot time in the market. And although we live in Dallas, which is a fantastic real estate investing market, it's extremely difficult to find projects here that make sense. And so, kind of our solution to that was to go out to tertiary markets and be the big fish in the little pond, find great deals, and run those. And, our portfolio has done pretty well. One thing that I'm really happy about is during that time, we did all fixed rate debt. So today we've got, today we're, not in a hurry where we have to sell anything or, not a lot of pressure.
Oh, that is such a wonderful position to be in multifamily these days. I was going to ask you how the recent turmoil has affected you guys. So how long are you locked in for most of these properties?
So our first one comes due next year in November, that we have. And, I won't mention which project it is in case it comes out in time, but it actually looks like we're going to probably exit that deal this year and exceed the projections to investors. So probably won't even be an issue. But if for some reason that, contract doesn't work out, then we might exit early next year sometime and still be pretty well ahead of it. Everything else is some point later after that.
Cool. So you and your wife, you come into these projects, do you kind of take down the whole thing, or are you co-GPs with some other partners on these properties?
Yeah, I think like a lot of people, it's a little bit of a mix. We started out, we did co-GP on a couple different deals with some partners, in particular a couple of our projects in Oklahoma. And then since those first couple projects, we've pretty much lead sponsored all the deals that we do. We both do this full time. I focus a little more on the acquisition side of things, and my wife Paula focuses a little bit more on the asset management because that's more in her wheelhouse and background. And so we kind of have the skill sets in-house to run projects more or less, I would say. And so since those first couple ones, we've been lead sponsors on all the deals. I think that if I can give a shout out to Paula, I think one of our secret sauce has been our asset management. We're pretty diligent on executing on business plans, sticking on budgets. And I think that's what's really made the difference between sponsors that have done well the last couple of years versus those that, maybe haven't.
So, Jonathan, you come from a very techie kind of analytical background. What skill sets do you bring from engineering into real estate that you find make things easier for you than perhaps for some of the rest of us?
Yeah, so I mean, obviously the first thing people think of is running numbers and analyzing deals and all that. Obviously, I can do that and I can manipulate an Excel spreadsheet. So that's not an issue and certainly is a helpful skill set from the engineering world. I think one that people don't think of a lot is risk management and mitigation. So a lot of engineering, you have obviously your designing and your analysis, but a lot of engineering is understanding what risks are involved in a project and how do we mitigate those. This is particularly true in aerospace engineering, where we have vehicles that are flying through air. There's 100 different ways they can crash, and you need to figure out what those are before it happens, right? And so I think that a lot of the background, at least in the aerospace engineering world, is saying where are the holes at? How do we mitigate those risks? Can they be mitigated? And kind of what's the path forward that we're going to take? And so, transition that over to the multifamily world and kind of there's a lot of things we could talk about, but the debt topic, for example. I remember looking at deals back, during the really hot time in the market when I was earlier as an investor. And so, I didn't necessarily have the highest confidence level that like, hey, I'm doing everything perfectly right because I hadn't been in the industry that long. But
Right.
I think one thing that my background told me was like, hey, if you have access to debt that's this leverage and this price, and as a result, you're able to get this value from the property. If that debt source goes away, in other words, interest rates go higher, leverage goes lower, you're going to have lower property values. And, a lot of people that were, maybe newer in multifamily at that time are like, well, values, they may go down a little bit, but, cap rates and interest rates are not correlated in any way. Of course, turns out that they, in fact, are. And
Yeah.
so, yeah, I think that's one very tangible example, but there's a lot of other similar ones too.
Yeah, very cool. So you and your wife, the lead sponsors on a lot of your projects. Do you bring in co-GPs typically in these kind of deals, or you just kind of run the whole thing by yourselves?
Yeah, we do. We usually have a few co-GPs on deals, and there's several reasons for that. Obviously, like many lead sponsors, we raise quite a bit of money for our projects, but we also have all our co-GPs participate in raising as well. But, one thing that I mentioned to people who are maybe, newer to this business is that it's always great when you can have a wide variety of skill sets going into these
Mm.
projects. So just like giving you one example, one of my
Yeah.
partners who has, we partner on a deal by deal basis. So, he has his own company, all that, but he's chosen to participate on every single project we've ever done. He comes from a military background. So he was an officer in the Navy, worked on submarines, a lot of leadership skills, a lot of
Mm.
skills working at things under stress, a lot of skills solving problems that don't have a straightforward solution. So someone like that coming to the table adds a lot of value, to the plate. And I think if you're the type of person that you can be open to other people's feedback and ideas and find out how to implement those well in a project, then good partners can really bring a lot of value to your projects and make them that much more successful.
Yeah, well said. So, Jonathan, at this point in the multifamily real estate cycle, a lot of people are trying to look at that infamous crystal ball. Some people are saying, hey, in the next 6 months, there's going to be a whole wave of opportunities coming down as, banks aren't being so flexible with refinancing regulations and that sort of thing as they are right now. What's your take on things? Where do you see things going for you and your company over the next 6 to 12 months?
Yeah, so I'll preface this answer. I've been asked this question a lot of times over the last 2 years, and I've been wrong just about every time. So
Me
I'll
too,
start
man.
out. I'll start out by saying that just to be completely transparent. But a couple of things that I think are useful. One is obviously it's more difficult to find equity in deals right now because a lot of deals are struggling, and so people who were limited partners in deals going back 2 or 3 years ago are more hesitant to invest today. And people who were not in those deals that read the news every day, they only see bad news about how
Yeah.
everything's awful and it's never going to get better. And so Equity is challenging right now, even if you do have a good deal. It is easier to find deals now, in my opinion, than what it was 2, 3 years ago, but it's not as easy as I think a lot of people thought it was going to be.
Yeah.
So I look at a lot of deals. Like I said, I'm an acquisitions guy, and I don't see deals that are just pennies on the dollar. Even a lot of these bank deals, which I have, put offers on several of, it's kind of just this perfect awful lose combination where the person that's leaving the deal is losing money and the
Yeah.
person going in the deal is getting squeezed as much as possible. And so it's kind of tough to grapple with that and say, like, is this really a beneficial thing overall? But I think the thing that I am really confident about is if you take a step back and you look at the big picture of real estate, a lot of people the last 2 or 3 years are extremely accustomed. They look at maybe a pitch deck for a syndication deal and, 3 to 5 year business plan, and we're going to 2x your money. And that's great if that happens, but that's never really been the promise of real estate investing. The promise of real estate investing is you're putting your money into a tangible asset. It's not only an asset, it's also a business, meaning it produces cash flow and it goes up in value over time. Now, on a given year or 2 years, obviously things can go down, but over time, real estate tends to appreciate in value. And so, if you buy a good property in a good location and you run it well and you can hold it as long as you need to, you're going to win. And I think if investors come in with that mindset of like, this is why we're in this business, then you're not going to be disappointed by the results that you get. But
So
when
more
it's
of a
kind of
long-term perspective on things and getting
Exactly, as opposed to
back
the
to the
get rich
fundamentals.
quick.
Yeah.
Exactly.
Well, I
Yeah,
think that's where a lot of us kind of lost our way over the last few years, Jonathan, is not looking at multifamily as a business. I mean, when things are going normally, the value of a multifamily is based on its net operating income. It shouldn't really be based on comps and what's
yeah.
going on. And I think, I don't know, I could be wrong, but it feels like it's kind of, you know, more level heads are coming to bear these days than before, and people are starting to focus a lot more on those fundamentals, making sure that it makes sense. What are your thoughts about that?
Yeah, I think so. And, I definitely think so. I think a lot of the folks who were, maybe didn't approach this industry with the utmost professionalism going back a
Yeah.
couple years ago. Fortunately and unfortunately, at the same time, a lot of those folks have kind of been weeded out.
Mhm.
So most of my friends in this industry now, we all have our difference of opinions and investing philosophies, but most are pretty serious investors that, they want to win. They're generally making good decisions and probably will win long term. Um, I think that if you can enter a deal now, independent of what happens in the economy over the future, particularly in terms of interest rates, and you can still get a deal to work well, you're probably setting yourself up for success. Now, it seems like here in the U.S., the new administration, they really want interest rates lower. There's a lot of press around that. We have a Fed chair that is going to be leaving next year, and just where we are in the cycle, I think there's a lot of reasons to believe that whether it's 2 months from now or a year and a half from now, we will have reasonably lower rates than what we do today. But there's no guarantee. And so,
Yeah.
if you can underwrite your deal where it works regardless, and then that happens, then it's just icing on the cake for your investment.
Yeah, most definitely. And being an old fart like I am, interest rates today ain't that bad historically speaking. Like
Yeah,
it's not out to lunch. We just got so spoiled for so long
agree.
that it feels strange. Awesome, Jonathan. Well, this has been a great conversation. I'm sure there's going to be some folks listening or watching this who'd like to connect with you. If they do, what's the best way for them to do that?
Yeah, they can check us out on our website, contact me there. I think the address is on the banner in my background, but it's Apogee MFC, like multifamilycapital.com.
What does apogee mean?
Great question. So obviously my background's aerospace engineering. In that world, apogee is like if you're calculating an orbit on like a satellite or some kind of object orbiting another, it's the furthest point that that object can reach in an orbit. But the more colloquial definition of apogee is it's like the pinnacle or the summit of something. And so, apogee ties back my past career as an aerospace engineer to what we're trying to do today, which is help investors reach their financial potential.
Nice. Good name. Jonathan, thanks for being on the show. This has been great.
Thanks for having me, Dave.
All right, everybody. Thank you very much for tuning in, and we will see you on the next episode. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.